Thank you. Good morning, everyone, and welcome to the New York City Audit Committee of December 11, 2024. I'd like to have the secretary do a roll call.
Good morning, everyone. Our private members, Michael Spitzer, Chair.
Present.
Larry and Angelo.
Present.
Mark Kaplan.
Present.
Marcia Van Wagner.
Present.
Our public members, representing Mayor Eric Adams, Sarah Wong. Present. Representing Comptroller Brad Lander, Jacqueline Thompson. Present. Representing Public Advocate Jamani Williams, Wesley Paisley.
Present.
We have a quorum.
Thank you. Before we leave, I'd like to wish, because I understand, Wesley, this is going to be your last meeting, so I'd like to wish you lots of luck in your new endeavors on behalf of the committee. Thanks.
It was a pleasure serving
Thank you.
for the city of New York.
You will never forget that.
Capital T?
Yes.
Yes, that capital?
I'd like to have a motion to accept the minutes of the meeting of November 19th, 2024.
I move it.
Thank you. Okay, without anything else, I'd like to go back to the agenda. The first item up is members presenting on behalf of the Public Realm Improvement Fund Governing Group, Inc. Could you please identify yourself, and if your auditors are here, they as well, and this is all just for the record in the minutes.
Hi, I'm Jeannie Pack. I'm the treasurer for PRIF. We're also going to be presenting for New York City Economic Development Corporation and New York City IDA. I serve as the chief financial officer for EDC and IDA and the treasurer for PRIF. In person, along with me is Spencer Hobson, who is the treasurer for EDC and IDA, as well as Leslie Escobar and Amy Chan, who are both assistant treasurers for EDC and IDA. We also have Ezra Moser, who is a senior program manager for DCP, who runs the PRIF program. And on the screen, we have Daniel Hurlbert, from a partner at Ernst & Young, who serves as our auditor for EDC and IDA, and Brett Jensen, partner at EFPR, who's the auditor for PRIF. So I'd like to turn it over to Leslie to talk about the three entities, and she'll start with PRIF. Thank you.
Thanks, Jeannie. Good morning. Today I'll be presenting highlights of PRIF's June 30, 2024 financial statements. The Public Realm Improvement Fund was created to fund public realm improvement projects in East Midtown and is funded by contributions from projects that use development rights from landmarks within the East Midtown subdistrict. We received an unmodified or clean opinion on the fund's financial statements, and there were no internal control significant deficiencies or material weaknesses identified as a result of the audit. On the balance sheet, which is on page 8 or PDF page 10, PRIF's total assets amounting to $52.2 million, made up of cash and investments, increased by approximately $2.6 million or 5% as a result of investment earnings generated during 2024. PRIF's total liabilities amounting to $51,000, increased by $16,000 due to fiscal year 2024 operating expenses incurred and the timing of payments made to NYC EDC for reimbursement of costs paid on the fund's behalf. Next, on the income statement on page 9 or PDF page 11, operating revenues decreased by $0.9 million. Or 100%, as there were no contributions made into the fund during 2024. Operating expenses increased by $8,000 as compared to the prior year. The increase was primarily due to higher audit fees and bank fees. Non-operating revenues are attributable to investment income as a result of higher interest income and higher unrealized gain due to favorable market conditions. These components resulted in an increase in net position of approximately $2.6 million, resulting in a year-end net position amount of $52.2 million. Thank you. That wraps up the presentation of the PRIF fiscal year 2024 financial statements.
I have a question. Do you have an audit committee?
PRIF?
Yep.
Yes.
Yes.
Well, EDC and we'll handle later, but so you do have an audit committee, okay. And the management letter, you said there were no findings?
No.
what is the difference between this organization and something that we've always been dealing with, something called BIDs, Business Improvement Districts?
Thought the green light was on. Thank you. Ezra Moser from City Planning here. Not a business improvement district. There are business improvement districts with territory within the area that is covered by our governing group, but this is, again, a multi-stakeholder, both mayoral and non-mayoral group of 13 representatives who come together to decide where these funds can be allocated to for capital projects. So there's nothing related to maintenance the way a bid would. I mean, they're just fundamentally different organizations. But happy to answer any questions on.
You know, because getting into that, so when will projects be identified and these funds be starting to be spent? Because for 3 years now, and I'm looking at page 6, there was only administrative expenses.
Yeah, no, that's a fair question. The capital improvements that this fund, is designed to fund and implement, they're quite expensive. So they're typically, we did at the outset of the creation of the group, and it followed a rezoning action with the City Planning Commission. We identified a suite of improvements, and we actually, there was roughly 50 million from the general fund originally allocated to the group, which has been spent on projects. The amount that's in our account currently is strictly from these development rights transactions, and so we've essentially been saving up enough to be able to allocate it to bigger projects. We did spend or allocate roughly $1 million to a project where we are issuing an RFP for a landscape architect that will help re-envision Park Avenue, the medians of Park Avenue. They're going to be expanded. There's a lot of reconstruction going on for the train shed underneath. And so that's like the most recent capital-related project we've.
And when you say development, these are the air rights?
Correct. That's,
Okay.
yep. That's how it's funded.
Does anybody have any?
Yeah, do you, so these are all public funds that come in, correct?
They are, I mean, it's from private transactions that are regulated by the zoning resolution. And so then it comes into our account.
Okay, but if your if your interest did not exist, where would those funds go? They would go to the city, wouldn't they?
I mean, I don't think we would have been able to create the framework for those funds to even, happen. Were it not to-
No. What I'm asking you is if your organization did not exist,
Right.
those funds would still exist and they would go to the city, or they would not exist at all?
I don't think they would exist at all. That would be
Why do you think they wouldn't exist?
because that was part of the basis for the rezoning that created the ability to transfer air rights and include as part of that contribution that goes into this fund. So I don't really know of any examples offhand where TDRs don't go to something that's effectively an LDC. They would go to city.
But and just forgive me because this is not an area I
No worries.
know very well. So when a building, the whole structure of air rights, right, is public law, correct? I mean, that's all right. So it's public law, and you can't really violate that public law. And the only reason you get to change it is that the building or the next whatever the owner is willing to pay, to change it. Do I have that correct? Is that right?
Well, so typically air rights are done by just strictly private transactions. It's technically the zoning resolution of the city of New York that allows for that to happen, but it's
Right.
a private transaction that we are not even aware of unless we review the
Right.
legal documents. We also in our zoning have created provisions with which a building that has air rights can transfer just a little bit further to another site. But again, typically apart from any zoning actions that would be needed to effectuate that, it still is technically a private transaction.
Okay, but I'm sorry, but forgive me, but I'm not quite understanding. At least, I guess my understanding was you have this building and it can only be so high, and I know you get to, you can set back and so the sun comes in and whatever, but if you choose to have a building that doesn't meet all of those requirements come from city law, correct?
Yeah, I mean, it's the zoning resolution of the city. of
Okay,
New
it's a
York
zoning,
that
right,
governs,
okay.
yeah.
And so the individuals or the private firms that would like to change this then have to, they're violating a law, correct? I mean, I don't want to say violating, that's probably the wrong word, but I will say they're
Violating.
they're violating, they're doing something that was not permitted in the law, correct?
It really depends, actually. If they are two contiguous properties, it's totally within the law to, for them to make a private agreement between the two of them and to sell their air rights to their neighbor.
Right.
These provisions come in where, as part of the rezoning that we did in 2017, we wanted to expand the universe of sites that could purchase air rights from a landmark. And so, again, these are private transactions, but because it's expanded, there's a contribution into the fund. And absent the fund, the contribution probably wouldn't exist, and the ability to transfer would.
So why doesn't the money go to the city? Because again, what I'm trying to understand is if there's a zoning rule that you're, I don't want to say violating, but let's say changing to some extent, you're doing something different. Why doesn't the money go to the city rather than to a developer or your organization?
Build something. Does the next door neighbor who is consenting
That's the question I'm trying to get to. Thank you very much.
I have maybe a different way to frame this, is the rezoning created property rights that previously did not exist under the old zoning. And under those new property rights, that was created specifically to generate transactions that would fund this fund. Is that a correct statement?
And I want to exclude one thing before you answer that question.
Say again?
I want to exclude one thing, because I know you're going to say that there are some exceptions, like, for example, that where two property owners, or one property owner owns two lots, and so they could trade between air rights. So exclude that possibility and answer the question in that area.
Yeah, so I'd say it's about 95% correct. The only difference is that the property rights existed as they did before. It's more about expanding the universe of who can purchase them.
Well, I guess that's sort of a change in property rights, right? Like the ability to make a transaction in a particular way is
Yes.
a kind of related property right.
Yes.
I mean,
it's-
I would see it that way.
Okay,
Anyway,
understood.
I'm not a lawyer, though.
No,
so.
no, all good. I mean, it's the amount of air rights pertinent to the sellers is the same. That was unchanged. It was just about expanding the universe of it. And the reason why we created the group is because we thought that, again, typically there's no contribution of any kind with air rights transactions, even when they have to go through a city-related process to be able to transfer to a further site. It's in this case, we wanted to create a stronger East Midtown. We have a district that this is all related to, and we thought that, again, the money that was part of the contribution from these areas transactions would be put into a fund that we could then spend on capital improvements, mainly to the pedestrian realm. And so, again, we had identified and studied a whole series of these improvements, like a menu of which that these funds can then be spent on.
I have a follow-up question about the organization. So you said there are a board of 13 members?
Yeah.
And is there overlap between this organization and the bids that are relevant, or are they totally separate individuals?
No, we kept them separate purposefully. Yeah.
And I just, this, unfortunately, this does happen to be the neighborhood I live in, so sorry. Uh-oh. And so I guess part of my question is, so this organization decides how it's going to spend this money?
Yep,
Okay,
that's its sole purpose, really.
correct. And so this is, I'm going to go back to, this is a law, the zoning law, that was modified. I'm not going to say violate, modified. And that modification generated a certain amount of income that went to an organization, this organization. Is that, now do I have that right? Is that,
Yes, I
Okay.
mean, it laid the groundwork for it and
Right.
future developments.
yes. And so I guess that my question is that, it does seem to me that the city, the government that we all, vote on and pay taxes on and da. It just seems to me that I don't know why these decisions are made, why these decisions aren't made by the city, that we all vote, for the mayor and the council and all of that stuff. Why would that be the case? And I guess the other thing I do want to, just a more specific question. On page 7, it says, if I have any questions about this report, I should contact Economic Development Corporation, blah, blah. Could you give me a phone number for that, please?
Yeah, sure. I mean, I'm the point of contact. My colleague Ben Huff will actually
Okay.
be taking that over. But,
Sure. What's the phone number, please?
Yeah, hold on. It's 212.
Uh-huh.
Sorry, 1 second. 720-3583.
3583?
Yep, and mobile would be 207
Yeah.
632
Well, I didn't hear this, 207 what?
632
Uh-huh.
4725.
4725. Okay, thank you very much.
On the bottom of page 4, the very last line, you say, based upon certain criteria. I would suggest like you put an example in there because it's too open.
And is that in reference to examples of transactions or?
Well, it just says, the corporation is tasked to develop, maintain, yada, 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 and then it goes to apportion funding from the, what do you call it, PRIF? To the project based upon certain criteria.
Got it. Yes, understood. So I think high level, it would be a project that's defined as a capital project and that's identified in our concept plan, which is part of our governing documents. We update it every year. It's the menu of eligible improvements that funds can be put towards. So if we wanted to fund something that's outside of that list, we would still have to actually vote to include it in the list first, then it would be eligible to be paid for. But again, these have to be capital improvements as defined in the charter.
And could you, I mean, you do refer to the concept plan. How, if I call up, will I get a copy of the concept plan?
Yeah, I could send you
Okay.
the concept plan.
Thank you.
easily.
I have a question. Accountant said, they say on the last page, the last line, page 1, it says, including currently owned neighbors, substantial doubts thereafter.
That's a EDC question, perhaps?
Substantial doubts about its going concern, what doubts are you talking about? The other one is that This language I haven't seen very often. Then let me go on. Talk about professional skills. What other audits are you talking about? The audits. Oh, that's what it is, okay. Now, what is the ability to going concern for a reasonable period of time? I've seen going concern, I've not seen reasonable period of time. Talks about the operating revenues decreased, so that it goes to zero.
What page?
Right, it went from 863 to 0, because there were no transactions this year that brought in a contribution.
Have overhead, but no transactions.
We do have interest earnings, though.
Apart from the fact that the capital V in this city should be used all the way through.
On page 14, if I'm reading this right, city planning calculates and establishes the fee from the organization that's doing the improvement, desired improvement, and then you establish the fee that they will contribute to the fund?
Yeah, that's between, again, a seller and a buyer for like a private development. But yeah, city planning is responsible for maintaining the fee, adjusting it as necessary, and also understanding in a given transaction what the contribution rate should be. We have a minimum amount per transaction, but it's also based on 20% of the sale price, whichever is greater. So that effectively there would be a standard contribution even if the buyer and seller were the same entity and just passing each other for $0, let's say. So we are in charge of maintaining that.
So the rights are valued by the Department of City Planning?
The rights are technically
Is what it
valued.
says
Oh,
here?
we maintain the minimum of contribution, but the actual value of air rights it's between two private
Okay,
parties.
because it makes it sound like you value the actual air right value, the way it's worded.
Sorry, my apologies. The only thing that I can think of in that respect is that we, if we adjust the contribution rate over time, we do assess and study the value of transactions that have occurred to help adjust our contribution. But we only maintain and evaluate like the minimum contribution amount.
Okay, I mean, I would just suggest rewording that sentence, because the way it reads now, these development rights are valued by the New York City Department of City Planning, providing a basis for establishing the minimum contribution to the fund, which sounds like you set the price of the development rights, so, and then that gives you the, you know what I mean? It just sounds like the fix is in, you value it, and then you get the contribution, like you're in total control of the money flow, which
interesting.
makes it sound, which makes it sound a little bit more sus than what you're.
No, certainly
what
we
you're
can
saying.
reword that. In that context, again, this is just about if we wanted to, if we established the rate in 2017, and when I say rate, I mean the minimum contribution rate. Yeah, if again, something transacts at like a below market average rate, if we feel a need to adjust it because we think that 2017 conditions aren't reflective of the current conditions, we work with an assessor to understand the value of properties that have been transacted. Then we apply the same methodology we used in 2017, just with a new suite of transactions. And that's just to, again, understand what the contribution is, how the development rights are valued is between the two parties.
Okay, all right, I mean, so
Yeah.
you see what I'm saying about the
do.
way it's worded,
Yep.
yeah, all right.
Any other questions, comments?
Since you've been patient with others, be patient with me too and my questions. What is the role of the adjuster if you effectively don't have control on changing the value of air rights between parties.
Are you talking about what I was just referring to with like, oh, again, that would be if the city contracted with an assessor value, the actual name of this type of thing is eluding me, but again, they would help us understand the value of private transactions. We might not also have easily, records to, so it's really strictly just to account for transactions that are either, and again, we understand everything that's been done like under our provisions, but usually you have to include other private transactions that don't go through our provisions to understand what is the market for air rights generally in the vicinity. So probably made that more complicated than it's supposed to be. That's something that it's an ad hoc basis that we'd work with someone, and that's just to better understand what are the value of air rights that are both within our jurisdiction, but also outside of it where it's just a private transaction between two property owners. Maybe they just border each other and using like standard, it's allowed under zoning, but it's just kind of an as of right, as we call it, transaction.
Because from my standpoint, and I'm just going to walk through this, zoning permits more ability to different transactions for rights. And as you stated before, landmarks.
Yep.
But again, it's between two or more private parties. If one private party has more market clout, even though the air right is not as valuable, they may be able to push and exceed and change the hands of the market. I'm just wondering how the adjuster kind of comes in. And if, let's say, we're paying this adjuster to the city, they should be affecting public interest. So where is the public interest in this if we don't see all contracts and the market practice pushes excessively and it doesn't benefit any of the citizens? So that's why I'm trying to get at.
Oh, that's interesting. Let me think about how to frame that best. Again, the assessor is just helping us understand the universe of contributions, and then we work with them. And again, it's technically like this city planning and city planning commission rule change to adjust the rate. So we look very, we have a lot of scrutiny over how do we adjust the rate? Do we have a sufficient sample size to, because again, we want to make sure that it's not, reflecting market distortions from maybe a handful of transactors with particular clout. So yeah, like for example, the 3 most recent transactions came out of essentially a deal with JP Morgan Chase for an original transaction, and everything has been transacted at that price. That's why we would say we have to take a broader look and have a professional who does this help us understand what is the real accurate market value of TDRs, so that, again, a specific entity doesn't have outsized kind of imprint on this contribution. Yeah.
No, bring it closer.
I belong to a club which sold its air rights to a developer, and the developer couldn't raise any money. So it took 10 years before the ground was broken.
Yeah.
I always wondered how the air rights valuation was ever to be adjusted to the fact that the buyer couldn't find the financing.
Yeah, no, I mean, that's, again, there's so much that happens in the private market that way, and it's subject to, its own dynamics for each transaction.
We were just lucky we stole it so high.
Yeah, exactly. Yeah. I mean, and again, that's part of why we hire the assessor to help us understand, what is a reasonable rate that things are transacting for, and if there are any distortions.
So, and that's the thing I'm trying to understand, like, in Mark's example, you're going to have a space underdeveloped for a certain amount of years. The citizens are going to think, oh, we have a blight in our neighborhood. They're going to be frustrated. They're going to vote a certain way, et cetera. How do we, like, what is the role of the adjuster after you realize that one party is being excessive or putting duress on the other party, and it's going to affect the citizens? Like, when I sit here, my thought isn't about, hey, these two private parties are allowed to transact. my interest is that once we step into their transaction, one way or another, it has to help the citizens. So does the adjuster, like after you get the number, do you go back to them and put pressure? Like what does that come in? I'm confused.
No, I mean, the adjuster's really just giving us their opinion. Part of the reason why we haven't adjusted it is because the actions we have had are transacting at a rate that's pretty similar to, and actually it's slightly above what we, set our minimum contribution to be. So it seems like in 2017, when we, first hired the assessor to come up with this rate that DCP then implemented, it seems to be pretty accurate so far. And so in the nature of like this area in East Midtown, there aren't properties that are sitting vacant without, use for a while. These are transactions that happen most typically when there's like a very viable development lined up and that, can proceed. And part of that is because, again, it's very like relatively late in the development process that these transactions happen, and it goes through city planning. We have a process for it, and yeah, again, the assessor's opinion is just to help us best understand what's a reasonable, minimum amount that these.
So what happens in the worst case scenario?
We don't. Oh, worst case scenario from the assessor's point of view?
Yeah, he says that this is grossly excessive or et cetera. It doesn't help the public interest.
I don't think it would, because we're not asking them for that, like it's our decision about whether it's in the public interest. I
Okay, and
guess,
let's
in that
say you
respect.
find it's not in the public interest. What do you do?
I think, again, we try to be as objective as possible about what
Yeah,
our,
but you find it's not in the public interest. What do you do?
it's kind of, to us, we're just really.
Do you
looking
not
at
have the legal authority to do anything? Just curious.
No, the only thing I think we would have the authority to do is to say, and this would probably be partly the assessor's opinion, is that there aren't enough transactions to give you an accurate picture. Like, again, maybe there's only a handful that have happened, and that wouldn't be a reliable number necessarily to then peg the contribution rate to. So I guess that's the closest thing I could think of, is that the assessor would say, we just don't have a good enough sample size to give you a reasonable answer. And then we would probably say, it is working currently as planned.
Yeah, no,
So,
okay. If there's no other questions, I'd like,
I have one other,
Okay.
sorry, it's my neighborhood.
yeah,
Sorry, so the concept plan,
yeah.
your organization generates the concept plan, correct, or?
We maintain it, yeah.
You basically write the concept plan.
It was written in 2017. We can modify it. It's
Right.
remained essentially unmodified.
Okay. And do you take it around to the community boards? I mean, you do a draft, I assume. How do you know where the community stands on this?
Typically, the community engagement would happen once we actually select a project from the plan.
Wait, say again, I'm sorry to hear
Oh,
you.
my apologies. I'd say that the concept plan is, again, just strictly a menu. If we choose a project on that menu to implement, then it's usually DOT and DDC who are doing the kind of implementing of it, and they have a very rigorous like public outreach protocol that starts well before even a design is studied. So, I mean, the community boards also are part of the governing group. The governing group is technically mayoral, like controlled in that it's 7 city appointees, and then the balance are there's the council member, there's a representative that the speaker of the council can pick. There's both community boards, the Manhattan Borough President. So again, typically too, by virtue of that, the community can become aware of anything that's on the menu. The menus are
And what
public
happens
posted.
when the community doesn't like it? For
Typically-
whatever
Yeah.
reason?
Again, once, let's say we pick a project to do, like one of them, for example, that from the original funding that we got in 2017, is a shared street on 43rd Street. It's been being studied for several years, gone through several iterations, and that's largely because of both public input from Community Boards 5 and Community Board 6, but as well as the local stakeholders on that street. And so it does take time to study and understand, like, you know, what works for all the stakeholders involved. So there's rigorous public engagement there, and if the community doesn't like it, DOT typically takes that into account and tries to adjust the design.
Okay, and so when I make this phone call, I will get a concept of I will get a print of the concept plan
Yeah, absolutely. It's also posted on our website too.
on your website?
It is posted on our website. I believe that we just had our annual meeting last week. The most up-to-date one has not been posted on there, but it's effectively unchanged from the one that's on there. We have not added to the concept plan in quite some time.
Thanks a lot.
Yeah.
Okay, thank you. At this time, I'd like to go on to EDC.
Hi again. Now I'll be presenting highlights from the June 30, 2024 financials for the committee's review. EDC's primary activities consist of rendering a variety of services to administer certain economic development programs on behalf of the city, including construction, provision of financial assistance to qualifying businesses, workforce development, and the management, development, and promotion of the city's waterfront, markets, aviation, freight, and intermodal transportation, including the NYC ferry system, among other things. EDC received a clean opinion, and there were no controlled deficiencies or management letter comments identified as a result of the fiscal year 24 audit. I'll be walking the committee through EDC's income statement and balance sheet as of fiscal year end. And we'll start with the highlights of the income statement on page 11 or PDF page 15. Operating revenues for fiscal year 2024 totaled $1.2 billion, an increase of $112.7 million, or 10%. The increase in operating revenues is largely due to the increase in city reimbursable grants of $78.8 million and property rental, lease, and interest revenues of $45.7 million. The increase in reimbursable grants is primarily due to the costs incurred for city-funded programs and projects, including $151.1 million for the DOH Public Health Lab, $64.7 million for the New York Public Library, $57.3 million for Bush Terminal, $51.6 million for Willets Point, and $35.3 million for the Museum of Chinese in America. Increases in property rental and lease revenue was driven by continued recovery of cruise activity, which generated income of $36 million, and by additional rents recognized for Brooklyn Renaissance Plaza and South Brooklyn Marine Terminal, amounting to $9.2 million. This also includes a one-time gap gain of $25 million for the effective termination of the Howland Hook lease when we entered into the net lease with Port Authority at BMT. Fees and other income totaled $40.3 million, a decrease of $12 million as compared to prior year. The decrease is primarily due to fiscal year 2023 non-recurring transactions. Total non-operating income for fiscal year 24 totaled $74.9 million and is composed of $52.7 million of interest revenues earned on leases recognized in accordance with the requirements of GASB 87, and $22.1 million of income from investments. The increase of $12.1 million in investment income is due to higher invested balances and interest rates as compared to prior year. EDC's total expenses during fiscal year 24 were $1.24 billion. Project and program costs totaled $922 million, an increase of $81 million as compared to prior year. These were primarily the tax levy and capital funded expenses previously mentioned, covered by the grant revenue we just discussed. Property rental expenses were $101 million and remain consistent with prior year. Ferry-related expenses net totaled $55 million, an increase of $14 million due to higher costs for fuel and vessel maintenance. Personnel services totaled $84 million, an increase of $11 million due to an increase in EDC staffing. Contract and expenses to the city were 27 million, which is consistent with prior year, and other expenses also remain consistent at 55 million. Accordingly, the corporation's total revenues of 1.28 billion and total expenses of 1.24 billion resulted in an increase in net position of 37.7 million during fiscal year '24 and an ending net position of 712.4 million. Next, on page 8, or PDF page 12, we will go over EDC's condensed balance sheet at June 30, 2024. EDC ended the year with total assets of 4 billion, a decrease of 22 million from the prior year. EDC's assets are primarily made up of cash and investments, capital assets, which include the ferry vessels, a right-to-use asset for office space at One Liberty Plaza at present value, and receivables, which include 2.4 billion of future lease receivables recorded at present value for our tenant leases. On the liability side, EDC ended the year with total liabilities of 3.3 billion, which is a decrease of 60 million. Liabilities include accounts payable and accrued expenses, retainage payable, the lease liability for One Liberty Plaza at present value, which offsets the right-to-use asset, and 2.4 billion future lease revenues, which offset the recorded receivable. The corporation ended with net position of 712 million. And thank you. That wraps up the presentation of EDC's fiscal year '24 financial statements.
Anybody have any questions or comments, issues regarding EDC's financials?
Please press the button on the microphone. I was talking about,
Yeah, the variance is small, so it's relatively speaking, we consider that flat.
odd. Give me a minute, Mike. I'm coming. Describe the master contract. Is a one-year commencement, may be extended for up to 1 year.
That's our annual contract with the city.
I understand that, but you've extended every time, right?
Yeah, because the new contract doesn't kick in time, just process-wise.
I have another question. On page 13, how dependent are we on state and federal rebatement programs? And I ask this because I'm looking at one statement that says, decrease of 4.1 million in ferry-related expenses is primarily due to 6.0 million of dollars of rebates recognized from New York City's ferry participation in the state's petroleum business and sales tax reimbursement programs. Just saying, generally, how much are we dependent on federal and state petroleum programs? Rebates, sorry.
Not a lot.
Yeah, I think it's an added bonus that we're able to enroll in this program and get the tax rebates, but we're not relying on it, generally speaking, to run the ferry system.
So changes in any administration will not affect. Okay.
No.
Deposits. Why were you having uncollateralized deposits?
Page 39.
We talked about that already.
Uncollateralized, you talk about the quality of the depositor. Deposits, where's deposited? $197 million uncollateralized, that's a lot of money.
Right, we have been operating under the legal guidance that EDC is not an entity that can be collateralized.
Sorry.
Are you speaking into the mic? I know.
Yes, we are working under the legal guidance that EDC is not an entity that can be collateralized according to state law.
You have funds in some institution, right? In a
Correct.
bank. And that liability is open-ended because you don't have collateral. Who says you shouldn't get collateral?
Because we're not a entity as defined within general municipal law to be collateralized. That's the legal guidance that we
So
have been given.
you are the one I've ever seen here that's taking that risk. Usually you see, when you see that, you say that you only place it with high-value institutions or something. But to leave a blind statement that you're uncollateralized says something about the risk you take.
Well, we have, but we have, the the accounting standards mandate that we say that it's uncollateralized, even though it is with a highly
All right, well, I've
rated
seen that
entity.
one, but I've also seen a statement that says that that the funds are with high credit rating institutions.
Which we would argue as well, but again, the accounting standards have said that we need to plainly state that the funds are not collateralized.
Okay,
But what Mark is saying is add something that says the money is being held in a highly rated institution.
Understood.
Yeah,
Absolutely,
well,
we'd take care of
Bank
that.
and Wells Fargo.
Yeah, we primarily just bank with Wells Fargo and JP Morgan, so we can work with our auditors to add a note about the highly qualified
That
banking
note in other
institutions.
cases.
Okay.
Got it.
Okay.
I have a question. Or Mark, did you have more?
Go ahead, I'm
looking,
fine.
but-
I'm fine.
Oh, it's still, okay.
He's looking for his next
It's a
page.
sort of a structural question. EDC has a sort of ever-growing list of LLCs and so forth that are housed within it. And I guess I'm looking for a clear explanation of what the reason, I mean, is this just sort of potentially unlimited number of LLCs that can be formed? How are the LLCs, who makes the decision to form the LLC? Are these formed in order to generate, like, they're specific to a purpose, and so there's revenue coming specifically from that purpose to pay for it? Or I'm just trying to get a sense of the structural logic of this, like, massive growing pile of LLCs within the organization.
So it's not unlimited. We don't have the staff to maintain an unlimited number of LLCs. I would say that the primary reason is for the legal liability that associates with some of the transactions that we have been asked to enter into.
Talk about having high-quality collateral,
Yes.
but that's only, this is talking to custodial, this is only for OPEB, not the general funds.
Right, so our OPEB funds are either invested in money markets or mutual funds. And the amounts in cash are minimum, so they're FDIC insured.
We also have the other footnote on page 40 with a similar, I think, statement at the bottom.
Hedges? That's for our fuel hedges. It's for our NYC ferry system. We run the NYC ferry. It's only our fuel hedges. Otherwise, we're
Right.
not permitted to do other sort of derivative type products. It's just for fuel hedge. We don't do other financial hedges.
I'm done, Mike.
Okay, if there's no other questions, let's move on to IDA.
Okay, now I'll be presenting highlights of the fiscal year '24 financial statements for NYC IDA. IDA assists industrial and commercial organizations by providing tax benefits or low-cost financing to participating organizations through straight lease or other finance transactions. Bonds issued by the IDA are a non-recourse conduit debt obligations and are given no accounting recognition on the financials other than certain fees derived from the transaction. We received an unmodified or clean opinion on the IDA's financial statements, and there were no control deficiencies or management letter comments identified as a result of the audit. On page 10 of the financial statements, or page 13, we have IDA's income statement. As you can see on the last line, net position as of June 30, 2024 was $23.2 million, which represents an increase of about $1.7 million as compared with fiscal year 23's $21.5 million. The components causing the increase in net position of $1.7 million are as follows. Operating revenues for fiscal year 24 were $6.4 million, an increase of $3.9 million from last year's ending balance of $2.6 million. This is due to an increase in finance fees generated of $3.9 million. Operating expenses, which are primarily made up of a management fee to EDC, totaled $4.6 million and remained flat as compared to prior year. Under non-operating revenues and expenses, investment income for the year totaled $1.2 million, an increase of $0.7 million as compared to prior year, mainly due to market conditions. Special project costs in fiscal year 24 were $1.4 million, a decrease of $0.6 million over prior year. Special project costs were offset with investment income for net non-operating expenses of $0.2 million. Next, we will review IDA's balance sheet on page 9, or PDF page 12. IDA's net position of $23.2 million is primarily made up of unrestricted cash and investments of $25.7 million, offset with $2.6 million of current payables and unearned revenue. Thank you. That wraps up the presentation of the IDA fiscal year 24 financial statements.
Anybody have any questions or issues, comments on IDA?
Sure. On page 23, can you talk more about the New York Pro Tech piloting program?
Say it again.
Can you talk more about the New York Pro Tech piloting program?
You know, I mean, we don't have the program people here, so we're not prepared to answer that question, but
Oh, I'll just do a follow-up question then on
Okay,
that.
thank
And then I got another
we can
one.
answer that via email.
Can you answer? Wait, do you guys work on any Brownsfields by chance?
Say it again?
In Brownsfields? Do you work any of your projects govern around the area? Like areas that have in the past highly toxic and then you guys rehabilitate it?
Like remediation?
Yeah.
I believe we do, but that's through EDC. Also, and it may be partially funded through IADA, although I'm not certain at this point.
No, because it's the first thing that came to mind when I saw, let's see where it is. However, IDA believes that remediation costs will be material and will exceed the client's ability to meet their indemnity obligations. And then it goes into risk management, various risk of loss related torts. And I just kept on thinking about Brownsfields and the city, how we're trying to expand more housing and opportunities. But typically these are blights that have toxic materials years. And now I'm just kind of curious how that comes into play with IDA. I know it comes in play with other agencies. So that might be a follow-up question, but I do note I like your confidence in your statement, but believes it has meritorious defenses with respect thereto. That was interesting.
If I may, yeah, there's another one that I think is enthusiastic. The fact that you are to prevent unemployment. I've never heard anybody say that. I've seen reduce, but prevent unemployment is a Herculean task. You really want to say that.
No, it would take a look at that language.
One more little thing. You don't have a reserve from that risk management section, do you? For the risks that are described.
Maintain a balance, though, right?
Yeah.
Well, we do maintain a minimum balance as far as IDA's fund, fund balance is concerned.
I'm done.
Okay, thank you for coming this morning, and wishing you all a happy and healthy holiday season.
Thank
you.
you.
Next up is the Brooklyn Public Library. Updating my library card.
Library card there?
Yeah, how do I update my library card? Yeah. No, I have to update it. How do I do that? I have to go into a branch?
You can do it online, but then ultimately you should go into the branch to get a new card. But you could basically do everything online and you'll get a digital library.
Oh, I have.
No,
But you get 2 freebies.
and you have Where the Wild Things Are?
What?
Is that the Where the Wild Things Are card?
Yeah.
Yeah, that's a good one. That's a collector's item. We don't issue those anymore.
Oh, you want to buy it? So I could do this online?
Yes.
So can I get a Brooklyn Library card even though I live in Manhattan?
Yes.
All right, I'll have to. And a Queens?
Queens, yes.
Okay, good.
Help at the pass.
Yeah, because sometimes you have books that New York doesn't have on, I only read them online, but you have books that New York doesn't have.
I have all three, I just want to say.
Oh, how do I get Queens then?
You just go to the Queen's website. You just, once you're in with one, you can get the other one.
Okay.
Right, actually, as a resident of New York State, you can access all.
And the hold lists are different for each library system. So if you're on Libby, it'll send you to the list that's the shortest wait time. I have plenty of experience with it.
Well, you should use, are you using Brooklyn's?
That's yeah.
Okay, if you use our app, you also, sorry. We have a brand new app, and when you use the app, you can get the wait times for all of our, all modalities, basically. So digital, audio, physical, and even large print. So if you're dying to read something, you can see all
How
of the
long?
different, and you can choose the one with the shortest
When
wait
they're
time.
dying, you want their adding the life expectancy.
All right. Okay, so we could talk about that all day, but I think you guys want to hear about our
You'd rather talk about that.
You can just press the button on the microphone, please.
Okay. Does that work?
Yeah, I hope the prior conversation wasn't recorded.
Everyone should know. Okay, good morning, everyone. My name is Karen Sheehan, and I serve as Brooklyn Public Library's Executive Vice President for Finance and Administration. I am pleased to be joined today by Ty Danmola, the Chair of our Audit Committee, Amadou Waji, Vice President for Finance at Brooklyn Public Library, and William Epstein and Ravika Shankar from our auditing firm, Eisner Amper. Thanks to the steadfast support of the City of New York, Brooklyn Public Library continues to play a vital role in the lives of Brooklynites during fiscal year '24. Our mission to meet the evolving needs of our patrons remains at the forefront of our efforts. And in the last fiscal year, BPL circulated 9.5 million items, both digital and physical. We also hosted over 73,000 programs, attended by more than 817,000 individuals. In addition to our core services, BPL continues to advance its strategy to address significant deferred maintenance needs. We collaborated with the city on a self-managed capital projects, including the opening of the new Sunset Park Library. This project was a partnership with the Fifth Avenue Committee and exemplifies innovation by co-locating a 20,000 square foot library with 49 units of deeply affordable housing. I'm here today to report that Eisner Amper issued an unmodified opinion on BPL's consolidated financial statements for the fiscal year ending June 30th, 2024. As of June 30th, 2024, BPL's total assets stood at $226.9 million, an increase of approximately $17.5 million from FY23. Key drivers of this growth include a $2.5 million increase in cash and cash equivalents, reflecting the timing of receivables from the city and state, a $1.6 million increase in contributions, grants, and other receivables, a $3.3 million rise in the fair value of investments driven by strong market performance, a $6.5 million increase in right-of-use assets, which was offset by a matching rise in the lease liabilities due to lease term extensions, a $2.7 million increase in property and equipment due to construction expenditures. Other notable changes include a $3.2 million advance from the New York State Education Department construction grant for the Central Library's Phase 2 renovation, and a $1.3 million decrease in net borrowing from our line of credit. We also experienced a decrease of $1.1 million in accounts payable due to the timing of purchases and payments in FY24, and a decrease of $900,000 in accrued wages and terminal leave liability. Our operating revenue totaled $197.8 million in FY24, reflecting a modest increase of approximately $600,000 from FY23. Highlights include a $3.1 million decrease in city revenue, reflecting a mid-year PEG adjustment, a $1.3 million increase in investment income due to favorable returns on T-bills. Revenue from our FY24 gala was $1.4 million. This is noteworthy as there was no gala held the previous fiscal year. Operating expenses decreased by $2.5 million, largely driven by a $1 million reduction in salaries and related expenses, a $1.5 million decrease in professional fees due to non-recurrence of prior consulting contracts. Okay, and then moving on to non-operating activities. In FY24, we received $1.4 million in state construction grants and $5.6 million in other grants and capital contributions, including a $5 million private grant for the Central Library renovation. Investment income not used in operations contributed an additional $3 million, reflecting favorable market conditions. In summary, fiscal year '24 was marked by sound fiscal stewardship and impactful achievements that reflect our commitment to Brooklyn's communities. I thank you for your attention, and I'm happy to answer any questions you may have at this time.
I thought that the city, oh, I'm sorry, I'm looking at page 4. I thought that the city had promised no cuts to the libraries, but I'm looking at 23, 24, and it appears to me that there's a cut there. Am I misreading it?
So so in FY '24, so last fiscal year, we sustained a significant mid-year cut of $6 million. What was discussed publicly and in the press was largely a conversation about continued reductions starting in FY '25. And so when, in the adopted budget, when there was an announcement that there would be no cuts to libraries, that was referring to continued cuts starting in FY '25. We did sustain a $6 million cut in FY '24.
And that wasn't restored, right?
That was not restored.
Yeah, so that's the point.
sorry.
You had, oh, wait, I'm sorry, good, please.
Yeah, no, I just want to clarify. It was not restored for FY '24. That cut was planned to continue into FY '25. That's what was restored. Yes. Does that make sense?
Okay, so just to clarify, so you had a $6 million cut one year, and it was restored the following year?
So we sustained a $6 million cut in FY '24. That cut was going to increase to over, to I think, 15 million, starting in FY '25. The FY '25 15 million was restored. The 6 million that we lost in FY '24 was never restored.
So this is a $6 million reduction that you just live with?
We just lost it.
Okay, thank you.
How did you sustain the $6 million cut?
So we largely restricted hiring and materials purchasing and building base and strategic building, non-strategic sort of building maintenance. We did only the bare minimum building maintenance. The impact on service was that we had cut Sunday service. So we were no longer able to provide any library service in Brooklyn on Sundays last year. We also, it became challenging we had a lot of sort of unexpected closures because our staffing was so constrained because we weren't filling vacancies.
So since that cut was baselined, the 6 million,
The cut was not baselined. So it was, I'm sorry, so we had a 1-year $6 million cut. Then we were facing a baseline cut of $15 million. So it was $6 million lost last year, and we were facing an increase of that. That cut was going to grow. But all of our funding was restored starting FY '25.
oh, okay, I was confused, because it sounded like the 6 million stayed, like, as a cut, they just didn't do the rest of it.
We lost $6 million in FY '24. We didn't lose any, in the end, we didn't lose any money starting in FY '25.
Okay,
So they put the 6 million back?
Yes, the PEG was not implemented.
it was not a
starting
recurring peg, it was a
not a
one-time
recurring
peg.
peg.
Okay.
Yes.
All right.
Wesley?
I'm just gonna thank you for coming again, and I'm just gonna ask the question I usually ask pretty much every year about accessibility. When you said only did the bare minimum maintenance, does that include ADA accommodations? Like, let's say you're going for an elevator, chair lifts, etc., like that. Was that also included in FY '24?
Yes, we prioritize accessibility to the building. So if elevator maintenance, lifts, all of those, that's considered a priority for the library. So if an elevator or a lift is out of service, the maintenance of that piece of equipment is prioritized always.
And again, a reoccurring question. Let's say a site is closed. Does a temporary site also follow on the bare minimum standards of an ADA maintenance?
Right, so when we select a temporary location, we prioritize accessibility. So typically, so for instance, we, typically our temporary locations are small and they're not multi-floors, so it really becomes about access in and the size of the door and if we're offering public restrooms, we would certainly want those and seek to have those public restrooms be ADA accessible.
And those public restrooms or ramps, they also get maintained in that
Yeah.
time when it's on the bare minimum.
That's correct.
All right, thank you.
Most of, I was looking at your construction projects, and I don't see, oh, I'm sorry, page 20, 27, and 28. And mostly you're doing these projects without using DDC?
Yeah, so.
How is that working?
Okay, so so you would not see the DDC projects in our financial statement because they're all through, all of the funding is managed through DDC. We do use DDC, we actually have 37 projects with them. They tend to be a handful of major building renovations, but more frequently it's for building system repairs, so HVAC systems, roofs, elevators, things like that. What we found over the years was that we have such great deferred maintenance needs, and DDC's capacity to meet those needs in the timeframe that we need in order to continue delivering services to the city and to our patrons. About 10 to 15 years ago, we embraced a strategy to utilize the city capital grant program where where BPL manages the project. We combine city capital funds with private funds or state funds. And when we do that, BPL takes on all of the risk associated with the management and the risk associated with the project. And then we submit for reimbursement to the city for the city's share of the projects. It's been a tremendous success. In sort of a 20-year period from like mid-90s to like 2015, we had only fully renovated 2 branches. And during that time, and around 2015 was when we started embracing this new strategy. And starting in 2020, we have reopened 8 fully renovated libraries. And new libraries. Adams Street is a new library. The Library of Arts and Culture that's opening next month, that's a new library. So of those 8 projects, 6 of them were managed by BPL. 1 was EDC and 1 was DDC. So it's been a very successful strategy for BPL. It's not without risk. We need a significant line of credit in order to manage the cash flow from the gap from when we begin the projects and get to when we get the CP and to when DDC begins to reimburse us. But we believe it's worth it, and we have 5 more projects scheduled for the next 5 years.
I'd like to, no other questions. I'd like to thank you for coming this morning and wishing you good luck in a happy and a healthy holiday season.
Thank you so much.
And I'll go online.
Yes, please. Reach out if you have any problems. Thank you.
Have an honored one, I understand. Queens. This is the one where the person in charge had lots of issues. Holtzman, I think. Yeah. Good morning. Please identify yourselves and if there's anybody on Zoom so that we could get them into the record.
Yes, so my name is Stephen Mack. I'm the Chief Financial Officer of the Queens Public Library. To my right is Vanessa Liriano, who's our Vice President of Finance. And on the Zoom, our representatives from our audit firm, or BDO, Ritesh Lal and Christina Palisano. So good morning. I appreciate the time provided for me to talk about the Queens Public Library. Before I get into some of the financial highlights, I'd like to talk about some of the great work the library has done over the past year. QPL continues to meet its mission of building strong communities and creating a cohesive and empowered society. We operate in 66 locations throughout the borough of Queens, the most linguistically diverse place on earth, and offer active collections in over 50 languages. We employ over 1,400 people annually, of which 86% live within the 5 boroughs. There are 1.6 million cardholders, more than 3.8 million items in our current collections, and over 1,000 computers available for public use. While 2024 was challenging as a result of the mid-year cut we received in November 2023, we continued to deliver quality service to the public. For the 2024 fiscal year, we continued along the same trends from the previous year, with total cardholders increasing to almost 1.6 million, with new library card registrations being 104,000, an increase of 11% from the prior year. Total circulation increased by almost by 1 million items to approximately 8.7 items. While physical circulation still makes up the majority of our collections, our e-circulation grew at 33% from the prior year. Our gate count increased by 700,000 to 6.3 million. Program sessions increased to 56,000, with program attendance increasing 110,000 to 968,000. Wireless sessions increased 3 times to over 1.7 million, and computer sessions increased by over 100,000. In December of '23, we reopened our Steinway Library following an 8-month renovation of the cellar and main floor. The upgrades included new furniture, new shelving, workstations, self-service kiosks, computers, and concluded a multi-year project that involved the construction of an elevator that now serves all floors, an ADA accessible restroom and ramp, as well as addition of 24/7 exterior return machines, improvements to the second floor, and expanded Wi-Fi capability. Also during fiscal '24, we signed a new lease for our LaFlamme City location, which has been closed since 2021, and design of that new library is underway. Subsequent to the fiscal year, in July, we reopened our Far Rockaway Library, and in August expanded our Sunday service to this location. In August, we reopened our Broadway location. In September, we reopened our Hillcrest location, and in October, we reopened Laurelton. Next week, we will be reopening our Bay Terrace location. During the fiscal year, we also replaced several boiler and HVAC units throughout the library system, repointed the brickwork on the exterior of several locations, and completed several roofing repairs. Through funding provided by DCAS, we've hired an energy analyst that will be working to ensure our buildings are as energy efficient as possible. We completed the rollout of external Wi-Fi to 60 of our locations, which allows for free connectivity for the community to access online resources. We've enhanced our cybersecurity protocols and processes, upgraded our self-checkout system to allow for a quicker and more seamless experience, and overhauled our mobile app to provide a more intuitive experience to our users. Aside from the numbers before, from a public service standpoint, in 2024, we continue to raise awareness on the freedom to read to allow unrestricted access to diverse viewpoints. With our counterparts at New York Public Library and Brooklyn Public Library, Queens Library partnered with the American Library Association, United Against Book Bans, and the Association for Rural and Small Libraries to create a nationwide Freedom to Read Day of Action. October 19th of this current fiscal year, at our Flushing Library, Queens Library staff and customers united along with 200 library systems across the nation to spotlight the importance of standing against censorship by reading excerpts from banned books. In addition, we made a selection of banned books available in our digital collections to users with no waits. And we recently launched a banned books library card design contest where the winning artwork will be featured on a special edition Queens Library card. We continued our outreach and programming to the incarcerated population with programs at Rikers Jail Complex, the South Ozone Juvenile Facility, and the Queensborough Correctional Facility. This month, we will begin serving the Crossroads Juvenile Facility. Our programs at these locations include quarterly resource fairs, twice monthly resume workshops and tech classes, reentry services, and digital programs for recently released individuals and job training skills. We continued our teen initiatives, including youth justice, college access, young adult literacy services, and teen centers. We offered ESOL programs, which were attended by over 84,000 individuals, numerous early learning programs and after-school programs, and GED classes, through which a number of our participants secured employment either during or upon completion of our program. Lastly, our language line service, which we launched in the prior year to provide one-on-one translation in over 200 languages, assisted 1,100 individuals across 42 of our branches. With regard to the financial statements, Queens Public Library is in strong financial shape. Our auditor's BDO issued an unmodified, i.e. a clean opinion on our financial statements, and further, and most significantly, there were no findings with regard to our internal controls. Total operating revenues for the year was approximately $198 million, with over 90% coming from the City of New York. In total, from all funding sources, our operating revenues increased by approximately $5 million. Total expenses were approximately $185 million, of which 2/3 were staffing and other related costs. Almost 90% of our total spending was on library programs and services, and total expenses increased by $2 million. We spent over $6.7 million on library collections, which represents over 20% of our non-staffing expenditures. Our total assets increased by approximately $18 million, mostly due to an increase in fixed assets due to capital renovations, as well as due to an increase in long-term investments. Total liabilities decreased by $3 million, which was largely due to the timing of cash receipts and the payment of bills. Thank you for your time, and with that, I will turn it to see if our auditors want to provide any additional commentary.
No, just, we issued an unmodified opinion on the financials, as Stephen said, and we had no management letter comments, so it was a good audit.
No, your organization has come a long way from a number of years ago when we heard it was constantly in the newspaper about lots of issues going on about the Queens Public Library. So I congratulate you on that.
Thank you.
Anybody have any comments or questions?
One I should have raised, some mechanism by which the 5 public libraries get together.
Yeah, so I mean, me and my counterparts who just here speak, regularly, and there is a standing meeting of the 3 library systems that meets, every few weeks. That includes not just the finance, but the program folks and folks throughout the system to meet and discuss, ideas and challenges and problem solve. Yes. So the Queens Library has a $10 million line of credit, which I'm happy to say we don't borrow on and we haven't needed to. However, we do have a self-funded workers' comp program. And that requires so the State Workers' Comp Board requires that we have some amount of money on reserve, if you will, to make sure that we have money to pay the claims. And so there is a carve out of our line of credit of that $2.1 million that serves as that reserve for the Workers' Comp Board.
Environmental
Yeah, well, you'll notice that on the copy I wrote for myself, it's two-sided. I'll make sure our auditors take note of that.
Did you have the same experience with the city in terms of funding that the Brooklyn Library had, where you had, I see a tremendous cut,
Yes.
23 to 24, and that cut was put back
Yeah,
later?
so, yeah, in November, us and all three systems, I received a cut. Queens Library's cut was $6.8 million.
Right.
Which we, sustained throughout, last fiscal
Yeah.
year by, in the same manner that the other systems did, which is cuts to our collections and managed hiring and delaying some of the maintenance expenditures. Fortunately, this year with the city budget, that money was restored.
Right.
Back to whole to where we started the prior fiscal year with, and as of now, we're not aware of any cuts in the future. So yes.
And I'm just looking at, funding you've received from the federal government, which seems like you took, no, you didn't take a haircut. No, you did. You took a slight haircut, but okay. Are you at all worried about, you don't get a huge amount of funding from the federal government, but you get something. And are you at all worried, given the new president of the United States and that party's lack of commitment to reading and who's who are very committed to making sure people only read the certain sorts of things? Are you at all worried about that? You worried you're going to lose some funding from the feds?
I think, I don't want to say where, I think it's a concern. I don't know that, I think the funding that we receive from the federal government are grants that we apply for and we're awarded that serve, all kinds of purposes throughout the library. So certainly to the extent that, those programs are cut and those funding initiatives at the federal level are cut, that it impacts us. Certainly we would have decisions to make about, the ability to continue certain of the things we do with that funding.
And what federal agency does that come out of? Is it Department of Education
Department
or?
of Education, and I think we got one small from the museum.
Yeah, the IMLS, the Institute of Museum and Library Services.
So it's basic, the bulk of it comes out of the Department of Education.
Yeah.
Yeah, okay.
I'd like to thank.
What? No. Making sure that the censorship does not prevail. So congratulations on that.
I'll take that back.
I'd like to thank you for coming and wishing you both a happy and healthy holiday season.
Thank you. Same to you all.
Likewise.
So I don't get to ask a question?
Oh, I didn't know you had any.
I always have the question, same question every year.
I'm sorry.
It's fine. As it was brought up, you guys received a cut. You did state that you had to cut services. Were any of those services cut regarding to ADA maintenance, accessible maintenance?
No, so I think similar to our counterparts at Brooklyn, I think, accessibility to our library is, priority, priority number one, I would say. And so, we did not, any of the maintenance things that we did have to defer, certainly were not related to ADA, compliance or accessibility. And, as I noted in my presentation, when we do renovate libraries or take on construction project, that is also a priority and a focus area that we make sure that our library is accessible to all patrons.
Next question is, are all your locations ADA accessible?
I believe so. I think some of them are older, so I can't sit here and tell you that, up to maybe what the current codes or standards are, but I can say, but I would say I believe so. They're all accessible at some, in some capacity, and certainly, again, as we renovate, we certainly bring them up to the new current standards.
Okay. How's the construction for accessibility on Hunters Point going?
That construction started, it's happening overnight, it's ongoing. I don't recall the time frame, so I don't want to say anything that, but it is happening, it is ongoing. And, again, the branch remains open while it's happening.
And if you have temporary locations in the midst of construction on a primary location, are those ADA accessible?
Yeah, so similar to what my counterpart from Brooklyn said, if we do get temporary locations, those are typically smaller in nature, and so it's usually single floor, so it's a matter of just accessibility into the building, and of course, being able to maneuver around the library. We also offer, if we don't get a temporary location, we provide mobile library service in that community.
And again, following up regarding to the cut, in those temporary locations, was ADA maintenance also still primary? Meaning that it was not cut during the loss of funds?
No, that was not cut. I mean, the things we would typically defer would be, well, we would like to replace this boiler unit, but maybe we'll kick that can down the road, that kind of stuff.
Thank you so much.
Thank you.
Once again, thank you.
Thank you.
Thank you for your time.
Somebody, your counterpart had mentioned that Queens, we would be able to get Queens library cards?
Yes, you can, yes, you can, and you can go online, or of course, go into any branch, and we have I don't know if there's any more, there's a Mets card, there was a Mets card, there's a hip-hop card.
No, I understand. I have a historic Brooklyn one
And
with
at some
the
point-
animals.
And at some point, the banned books card will be coming, so.
Thank you.
I discovered my paper.
Well, that concludes the agenda for today. I'd like to have a motion to adjourn the meeting.
Moved.
I want to wish everybody a happy and a healthy holiday season. And once again, Wesley, good luck in your future endeavors.
Thank you so much.
Mikhail, we can